everyone, and welcome back to the Financial Podcast with Olivia. We've got an incredibly dynamic market story to dive into today, one that's seen significant shifts and is sparking a lot of conversation among investors. We're talking about the nuclear energy sector, which has experienced a pretty dramatic surge recently, with one company in particular, Oklo, grabbing headlines for its remarkable stock performance. What's driving all this sudden attention and upward movement? Well, a significant catalyst appears to be the anticipation of potential executive action from President Trump. Reports suggest he's preparing to sign executive orders as early as today, specifically aimed at giving a substantial boost to the U.S. nuclear energy industry. These orders are expected to focus on a few key areas: streamlining the often complex and lengthy permitting and construction processes for new nuclear reactors, strengthening critical domestic fuel supply chains, and potentially even invoking the Defense Production Act. The stated rationale behind this move is tied directly to national security concerns, particularly reducing the United States' current reliance on foreign sources, notably Russia and China, for enriched uranium. The market reaction to this news has been swift and pronounced. Investors, perhaps not waiting for all the details or the official signing, immediately began bidding up nuclear-related stocks. This broad rally saw significant gains across the board. Companies with ties to nuclear energy infrastructure and development experienced notable jumps. For instance, besides Oklo, which we'll discuss in depth, we saw companies like Centrus Energy, Nano Nuclear Energy, NuScale Power, Energy Fuels, and Uranium Energy all posting considerable increases in their stock values following these reports. This widespread positive reaction underscores the market's sensitivity to potential government support and policy shifts in this sector. Now, let's zero in on Oklo, because its story has been particularly striking. The stock has seen truly impressive gains over recent periods, skyrocketing nearly 100% in just the last month alone. Looking back over the past year, the performance is even more astonishing, with shares gaining a massive 514%. This rally, as reported, reflects growing investor confidence, fueled by what's perceived as favorable demand and regulatory trends, coupled with the company's distinct business model. One of the core factors supporting Oklo's potential growth is the fundamental shift happening in global electricity demand. Projections indicate a dramatic increase in the need for electricity in the coming decades. This surge is driven by several major trends: the accelerating electrification of transportation systems, buildings, and various industrial operations, and perhaps most significantly in recent discussions, the massive expansion of data center capacity required to power everything from cloud computing to, critically, artificial intelligence. These AI-driven data centers demand not only vast amounts of power, but also highly reliable and consistent energy sources. Oklo positions itself to address this burgeoning demand with its next-generation compact nuclear reactors. These reactors are designed to be versatile, capable of producing both electricity and heat, and importantly, they can run using either fresh or recycled nuclear fuel. This flexibility and capability are seen as positioning the company well to tap into this growing market need. Oklo's operating strategy represents a significant departure from the more traditional approaches seen in the established nuclear power industry. Instead of following the model where a company designs reactors and sells those designs to utility companies, Oklo is adopting a different path. Their strategy is to build, own, and directly operate their powerhouses. Then they intend to sell the electricity and heat generated by these facilities directly to end customers through long-term power purchase agreements, or PPAs. This structure is quite common in the renewable energy sector and is seen as offering several advantages. It can potentially allow for faster deployment of power generating capacity, provide tighter control over construction and operational costs, and create a more predictable and recurring revenue stream over the long term.
Furthermore, the design of Oklo's powerhouses is a key differentiator. They are described as small-scale and designed for flexible deployment. This means they can potentially be scaled to match specific customer needs, unlike large traditional nuclear plants that require massive upfront investments and complex, multi-decade planning cycles. Their fabrication is intended to utilize existing supply chains, which could help minimize construction risks and reduce overall project complexity. two areas that have historically been major pain points for large nuclear builds. Another critical growth catalyst for Oklo is their strategic focus on nuclear fuel recycling. This is a significant area of opportunity, particularly in the United States, where there's a large inventory of used nuclear fuel. This used fuel still contains a considerable amount of potential energy, enough, some argue, to power future electrical needs. Oklo is looking to capitalize on this by designing their reactors to run on recycled fuel. The company is also actively working towards deploying a commercial-scale fuel recycling facility with a target timeline set for the early 2030s. If successful, this capability could provide a secure, long-term fuel supply for their own fleet of reactors and potentially open up entirely new revenue streams and improve profit margins by processing and utilizing spent fuel. Diversification is also a part of Oklo's forward-looking strategy. A recent move highlights this: the acquisition of Atomic Alchemy. This company specializes in producing high-value radioisotopes, which have applications in various critical fields including cancer treatments, medical diagnostics, national security, and manufacturing processes. This acquisition expands Oklo's presence into another potentially lucrative segment of the broader nuclear market, creating new revenue opportunities and further solidifying their stated goal of becoming a vertically integrated energy company poised for the future. Despite these promising aspects and the impressive stock performance, it's important for investors to note a critical point. Oklo is currently still in its pre-revenue phases. While they are developing technology and solutions for the industry, this hasn't yet translated into meaningful revenue from paying customers, according to some analyses. Looking at analyst perspectives on Oklo stock provides further context. While the stock has appreciated considerably, leading some analysts to hold back from outright bullish endorsements, the consensus rating among analysts is currently a moderate buy. More specifically, some analysts have recently updated their views. Notably, analysts at Wedbush reaffirmed their outperform rating for Oklo and increased their price target for the shares to $55 from a previous target of $45. This revised target, which is also cited as the street high price target, suggests that even after the recent rally, there could still be potential upside, implying roughly a 46% increase from a recent closing price of around $39.72. Wedbush analysts believe that the expected executive order will serve as a significant tailwind for the entire nuclear industry, and they view Oklo as one of the primary beneficiaries. They noted that Oklo was already on track to submit a key license application to the U.S. Nuclear Regulatory Commission by the end of 2025 and aimed to deploy its first commercial power plant at Idaho National Laboratory by the end of 2027. They suggest that the executive order, with its potential for increased federal funding and a more streamlined regulatory process, could possibly accelerate this timeline. They also highlighted Oklo's business model of building, owning, and operating its plants and selling power directly as a strength, reducing pain points often associated with traditional nuclear projects, and see the company as potentially ahead of some peers with its planned deployment and the backing it has received. They explicitly link the demand for Oklo's small modular reactors to the soaring energy needs of data centers, particularly those driven by AI. However, it's crucial to temper the excitement with a realistic understanding of the challenges and uncertainties that remain. While the recent stock bounce has been significant, some experts view it as largely built on speculation, precisely because many companies in the space, including Oklo, are still in early stages, with low or no significant revenue. The nuclear industry, by its nature, moves on very long timelines, often measured in decades rather than just months or years. Permitting, constructing, and bringing a nuclear power plant online is an inherently complex, capital-intensive, and time-consuming endeavor. It's not a straightforward process, and the economics, including the high upfront costs and uncertain payback periods, can make utilities hesitant to invest heavily in traditional projects. History also offers some caution. The nuclear industry has experienced previous hype cycles where investor enthusiasm flared up, only to see stock values eventually pulled back. Even government efforts to rejuvenate the industry, such as attempts seen over a decade ago, didn't necessarily translate into sustained, meaningful earnings for many companies in the sector over the long run. So there's skepticism about whether this latest surge will lead to a fundamentally different outcome this time around, especially since changes to the nuclear bureaucracy could themselves take years to implement, potentially outlasting the term of a specific administration. The financial impact for these companies might ultimately disappoint investors who are anticipating rapid returns based solely on the news of a potential executive order. While the sentiment expressed by policymakers might be aligned with industry goals, the practical reality of executing complex nuclear projects remains a significant hurdle that an executive order alone might not entirely overcome. Lingering specters of financial inconsistencies for companies still burning through capital, coupled with the potential for unforeseen policy hurdles or competitive pressures, could pose roadblocks to even well positioned companies like Oklo. In conclusion, Oklo is undoubtedly positioned at a fascinating crossroads, having seen its stock performance rewritten in hues of optimism, partly driven by the broader trend linking nuclear energy with the insatiable power demands of accelerated AI adoption, and the immediate catalyst of expected government action. The company's innovative business model, focus on fuel recycling, and diversification into radioisotopes offer compelling long-term potential. However, the sector's history of hype cycles, the inherent long timelines and economic challenges of nuclear development, and the company's current pre-revenue status mean that the path forward, while potentially bright, is far from certain and could face considerable headwinds. The recent surge could indeed be a short-term move, and only time will tell if the industry, and Oklo specifically, can fundamentally change the economic equation of building projects to live up to the market's current enthusiasm. Thank you for joining me on the Financial Podcast. I hope this overview provides you with a clearer picture of what's happening in the nuclear energy sector and with Oklo stock right now. We'll continue to monitor these developments closely. Until next time, take care and happy investing.